Hello guys, we are back with another informative video. In this video, we will teach you how a stock market is different from forex market with all its rules and regulations. After watching this video, you will be able to know everything about forex trading and what trading we should choose as a beginner. Let's begin the video guys. Firstly, let us know what is forex market. The forex market is comparatively more volatile than stocks, which could offer an opportunity for instant profits but not without higher risk. This is why it is suitable for day traders who are used to a stock market risks and can seamlessly adapt to quick changes in the market. The forex market is more flexible than the stock market. The stock market and forex market differ in several ways. First, assets traded in a stock market, investors buy and sell shares of companies, while in the forex market, investors buy and sell foreign currencies in pairs. Second, trading hours. The forex market is open 24 hours a day, 5 days a week, while a stock market in India are typically open from 9:15 am to 3:30 pm, 5 days a week. Third, volatility. Forex markets are more volatile than stock markets, with quick price movements that traders can capitalize on. Volatility is something to measure how often the price of an asset changes. For example, if it changes every single day by a significant amount, 10 to 100%, it's considered highly volatile. But if it tends to remain on the same price or increase or decrease at a very slow pace, it considers low volatility. Fourth, leverage. The forex market offers a higher leverage than the stock market, which can be used to build equity with a small investment but can also destroy a trading amount. Fifth, trading volume. Forex generates a higher daily trading volume than the stock market. Sixth, number of assets. There are thousands of stocks listed on the New York Stock Exchange and Nasdaq, while most market players trade the 7 major currencies pair in the forex market. Now let us explain how forex is better than trading stocks. Forex trading can have very low costs, brokerage and commissions. There are no commissions in a real sense. Most forex brokers make profit from the spreads between forex currencies. One does not have to worry about including separate brokerage charges, eliminating overhead costs. Trading on forex is risky and requires a higher degree of skill, discipline and training. No formal training of degree is required. In addition to trading, there are jobs in market research, account management, regulation and software development. There are many benefits of trading forex, which include convenient market hours, high liquidity and the ability to trade on margin. We hope that you should understood everything about forex market and which trading is good for you. This video must have cleared all doubts regarding stock markets and forex markets. If you liked our video, like and share our video to your friends and subscribe our channel to get updated with our every informative videos. If you want to learn how to trade forex, support our video and write your views in comment section. Then we will try to cover this topic in another video. Meet you again with a new informative content soon. Thank you.